皆様こんにちは。日頃よりインド投資マンスリー動画をご視聴いただき誠にありがとうございます。今月は新年特別号として弊社最小親会社グループのインドの運用拠点であるインド最大級の運用会社 ICICI アセットマネジメントの CIO がインド株式市場の2024年の見通しなど今インドで注目すべき点について解説いたします。それでは早速ご覧ください。
Hello, my name is Shankaran Naren. I'm CIO at ICICI Prudential Asset Management Company. I have overall 30 years and more in managing India equity assets and other financial services. I would love to introduce you to look back at 2023, Outlook 2024 and sector and the new changes taking place in consumption area we are focusing on. The spotlight was on India in 2023 as it rose to prominence at the world stage, acting as the host of many critical global conferences, including the G20 summit. The G20 summit in 2023 achieved an important milestone of inclusion of the African Union with a full membership status. India also hosted the World Cup Cricket Championships and declared its bid to host Olympics 2036, amongst other things. Globally, worries of a rate hike cycle and potential hard landing in the United States are fading away as inflation continues to cool down. On the other hand, concerns of increasing fiscal deficit looms over Washington. Elsewhere in China, economic recovery continues to pace slowly with weaker than expected manufacturing data. Zooming in on India, India's GDP in quarter ending September 23 grew 7.6% year on year, which is among the fastest growing economies globally. Indian equity markets are trading at all-time highs, supported by strong flows from domestic and foreign investors. India's weightage in MSCI emerging markets has increased from 9.2% in 2019 to 16.6% in December 2023. I'm referring to December 4th, 2023, surpassing the weightage of both Korea and Taiwan. Additionally, India's sovereign bond inclusion into the JP Morgan Emerging Bond Index starting June next year is expected to draw inflows of over $25 billion, further deepening the Indian debt markets. India is also benefiting from the China Plus One strategy, and many large global companies have set up their manufacturing units. Continued efforts by the central government to set up a manufacturing-heavy economy through accommodative policies like the Production-Linked Incentive Scheme has aided the sector's growth. Additionally, noteworthy improvements in infrastructure, large pool of skilled resources at competitive costs, and a substantial domestic market make India well positioned as the upcoming manufacturing hub for the world. Besides manufacturing, the financial sector has remained resilient despite global headwinds, including a pandemic. Systemically important Indian banks are well capitalized, much over the regulatory minimum requirement. Asset quality of Indian banks have improved substantially with declining default losses and thereby improving profitability. Indian consumer behavior is experiencing a structural shift with premiumization being prevalent across various categories like apparels, cars, two-wheelers, liquor, and even footwear. Sales of premium products has increased at a much sharper rate than low-cost products. Premium consumption has translated to higher margins for companies and stronger corporate earnings. However, increasing share of wealthy India also highlights the disproportionate wage inequality of the larger sections of the society. To conclude, 2023 has been an exciting year for Indian markets. India witnessed strong net inflow by foreign and domestic institutional investors to the tune of 42 billion year to date. Even when the net inflows via systematically investment plans from domestic investors are at record high levels, the Indian investor is still underinvested in equities and mutual funds. We remain bullish on Indian markets over the medium to long term with expected earnings estimates for both financial year 2024 and financial year 2025 in double digits. We prefer sectors that are closely linked to the domestic economy like automobiles, real estate, telecom, infrastructure companies, private banks, and selected consumer companies. Further, healthcare companies are trading at reasonable valuation. Our investment philosophy to invest in large caps over mid caps and small caps is because large caps is expected to offer better returns, as many of the large cap companies have underperformed over the last 12 to 18 months, thereby resulting in better valuations. India's national elections are scheduled to happen in April-May 2024. While it is difficult to predict election outcome in a large country like India, where over 900 million go to vote, we have experienced that markets tend to exhibit high volatility in the run-up to elections. We would use this as an opportunity and aim to invest in fundamentally strong businesses which are available at attractive valuations. Thank you for your time today. We believe India is among the best economies to invest in for Japanese investors given its high growth prospects, large consumer base, increased focus on infrastructure, and rising per capita levels. We will continue to update you with information and opportunities to Indian equity and hope that it will help you in your investment endeavors.
いかがでしたでしょうか。インドのポテンシャルを感じていただけたかと思います。インド投資マンスリー1月号は以上となります。本日もご視聴いただきましてありがとうございました。次回もぜひご視聴いただければと思います。